Welcome to a Monetary Policy Special. The Reserve Bank and its Monetary Policy Committee, as expected, didn't change rates, but somewhat against market hopes, they didn't change their stance either. Nor did they hint that there may be a change of stance anytime soon. That's the biggest takeaway from this policy. A second takeaway is that the Reserve Bank is very bullish on growth. It forecasts 7% growth for next year, FY25, even though the government, or actually the finance secretary, told CNBC-TV18 he's only betting on a 6% plus rate of growth, not 7%. So it is a rare case of a central bank being more bullish than the government. Third takeaway, the Reserve Bank appeared to promise it will provide more liquidity, and hence the call rate or the interbank rate may hereafter be closer to the repo rate of 6.5 rather than 6.75 as it was the case last 5 months. And there was, of course, a lot of frank answers on why the restrictions on the payment bank of Paytm were imposed. But coming back to the main policy, what should corporates and banks and investors take away from the policy in terms of when rates may be cut and such other questions? I have with me an elite panel. SBI Chairman Dinesh Khara will be with us in just a bit. Mridul, Saggar, former MPC member and now professor at IIM Kozhikode. B. Prasanna of ICICI Bank and Samiran Chakraborty of Citibank, India. Gentlemen, thank you very much indeed for joining me. Well, Samiran, let me start with you then. The Reserve Bank did not really give any hint, as far as I could understand, in terms of stance. What have you taken away in terms of when they may soften and when they may cut, of course?
So, Lata, in a very nutshell, I would say that the tenor of the policy was slightly more hawkish than what we would have anticipated. And that prompts us to think that both the stance change as well as the first rate cut could be more delayed than what our earlier expectation was. And that's primarily because it appears that unlike in US, where the debate is about a higher real policy rate forcing Fed to cut even before the actual inflation target is being reached, in the Indian context, the governor is emphasizing that reaching that 4% inflation target is more important than anything else, regardless of where the real policy rate might be. So that way, we will have to wait a bit longer for a durable decline back to 4%. We cannot just go ahead and think that just because the real policy rate is becoming 200 basis points or something like that, the RBI will cut by 50 basis points. So we have now pushed back our first rate cut to October, and probably the change in stance will not come before June.
Oh, okay. So then it explains why the stock markets reacted the way they did. Clearly, it's more hawkish than expected. Prasanna, although the governor was very, non-committal about rate hike, as Samiran pointed out, they seem to be giving a little more liquidity. Is that how we should understand it? That hereafter they will keep the call rate closer to 6.5? What was your takeaway?
So I think, yeah. So before I get on to the liquidity thing, I'll also like to say that I kind of partly agree with Samiran. I'm still not fully convinced that this policy is good enough a reason for us to postpone our rate cut or a stance change expectation, but the probability has surely increased. And the reason I'm saying that is because by March, you can always have a lot of other developments which can come and can give RBI the fig leaf to kind of, still look at April stance change or at least a Q1 stance change and a rate cut in August. Coming on the liquidity, Lata, that you were asking, yes, I think the subtle message, in fact, the famous paragraph 21, which is what a lot of people have spoken about, seems to very clearly indicate actually that he wants the weighted average call rate to be closer to the repo. And if that happened, that is effectively a reversal of the stealth hike of 25 basis points that has happened. And if you remember, all the discussion that we were having earlier was that they will provide liquidity in February and March to ensure that the call fixings don't go to closer to the MSF rate. And that itself will be the first step. And then only will be the change in stance. But I think some of the market participants might have expected a change in stance today, because of which probably we have seen the kind of reactions that we have seen. But another interesting thing in that para was the fact that he was saying about deploying a mix of instruments to modulate both frictional and durable liquidity. And he had mentioned that to ensure money market rates evolve in an orderly manner. The way I am reading it, at least, is that I have greater confidence that RBI will do something about liquidity to ensure that the 675, 680 fixings do not happen. Of late, what they have been doing is a slightly change in their way they are doing it. They actually give you 14-day VRR money into the bank, and then they take out the 1-day, 3-day money in the form of VRRR, which I think is a better way of handling the liquidity deficit, so to speak, than trying to give only for 1 day or 3
Fair.
days. So I think net there is some going forward in terms of the dovishness, but I think the talk was absolutely the same as what he did last time, and that is why the market was a little disappointed.
Okay, yeah, I think there was an understanding that they will keep the call rate at 6.5%. My sense is they always knew that they have these instruments. They wantonly did not employ it in August and September because there was a six. Let me go to Mridul, Prasanna, because I let me get his first thoughts. Mridul, first of all, would you also say rate hike is postponed? And secondly, from where is this new reason coming for the change of stance? Until now, we were told that the stance will be withdrawal of accommodation because the inflation is not aligned to 4%. Now there is another reason that rate hikes are not fully transmitted. Should we read more into this? So, two questions.
Yes, Lata, first, obviously, about the rate cuts, I think it's very clear we were never really expecting it to begin before June, as Samiran has emphasized. So probably the policy stays there. June also, it's conditional. If you get a weaker growth and probably comfort of the inflation falling to 4, those numbers will come after the June policy. But that's where one can see the possibility that RBI might want to consider a rate action. We are not sure whether it will take or not. I have been saying that the RBI has been repeatedly saying that the target is 4 and not 2 to 6. This clarification has been given number of times. So basically, I think the expectations could have adjusted to that.
Okay.
The second point about the stance, I think you have a valid point, Lata, there. I mean, for the first time, we are seeing RBI trying to clarify the stance. And they have said that basically RBI has emphasized that basically the stance has to be interpreted in terms of interest rates, which is meaning the policy rate, which is actually the principal instrument of monetary policy in the current framework. Having said that, RBI hasn't still gone ahead and clarified what it means in the sense, is it the neutral interest rate they're talking about? No estimate is being given for the neutral interest rate, or where the real rates are and where they expect it to be. But that's fair. I mean, the central bank can't reveal all its cards, and they want to probably keep a sort of options hanging with themselves. So I think it's overall fine with what it is. And as Prasanna has quite clarified, that though the market is thinking it's a hawkish stance, I don't see it as a hawkish stance, neither a sort of a big relaxation in that stance either. At the margin, you have the interpretation of the interest rates guiding the stance. So we can go by that and see whether the interest rates can be cut or stance can be changed going ahead.
Okay, well, actually, I think the chairman is with us, Mr. Khara. Mr. Khara, one of the problems in the banking sector has been this craze for deposits. What are your takeaways? Do you think that the Reserve Bank's not changing its stance will mean that deposits will get more expensive?
But I think, having said that, the other aspect which has to be kept in mind is that they have retained their inflation projections at around 5.40 in this quarter, and also forward-looking, the trajectory is supposed to be inflation rate softening. So that is a scenario where perhaps the deposit interest rates may be where it is today, and this is what we expect What you indicated about, what is normally seen in the market is about the liquidity tightening. There are various other contributing reasons. Part of it is essentially around the advanced tax payment. There is invariably a situation where the liquidity is quite tightened. But at the same time, RBI has been resorting to measures which ensures that there is adequate liquidity in the system. It is ensuring that the system should not feel the stress and the pain, and it should not lead to a situation where the growth is not supported. So I think that aspect is well taken care of. And that is also from the point of view of, from inflationary expectations point of view also. Excess liquidity invariably creates in more of inflationary expectations.
Yeah.
So I think that aspect is also getting tackled in this whole process.
So you are saying you don't expect deposit rates to go up from here on?
My sense is that only, yeah.
Okay. Now let me come to the other question that I was asking Mridul as well. The governor saying that the rate hikes that RBI gave has not been fully transmitted. With this sentence, should we understand that more loan rate hikes will come? You think loans will get expensive?
See, much of it will depend upon bank to bank, and invariably we have seen that if at all banks are chasing some good quality assets, there's a huge competition in terms of interest rates. So how much of that will eventually get passed on will be a function of the risk appetite of each of the bank. If at all they would have higher risk appetite, maybe they can afford to charge higher interest rates too. So that's how I read the situation.
Okay, actually, my own sense is that the governor and the MPC did not want to change their stance, and this was invented as a new excuse. I'm sure the central bank knows that all rate hikes won't get transmitted because there is competition among banks to lend. That's what was my understanding. Prasanna, you wanted to add something. Do you agree that we shouldn't take this, all hikes have not been transmitted too seriously?
I do think so, Lata. I think sometimes you want to justify your actions and you want to, come out with some kind of, reasons. Having said that, I do also agree with Mr. Kara that, the deposit rates, though it seems to have peaked in the next 2 months because we are at the year end, it doesn't look like it's going to fall off substantially. Whereas once the RBI starts showing the liquidity angle, then I think we'll be seeing much more comfort in terms of how banks are borrowing and lending. But the competitive pressures, like you said, it's going to continue.
Fair point. Well, I think what you said earlier is also very important for a person like me, that deposit rates have more or less peaked. So those who want to lock into higher, fixed income, fixed returns, here's the chance perhaps. But I have to ask about growth and the fact that the Reserve Bank is so bullish. That question after the break.